Hey, Dan Passarelli here. How are you feeling today? I want to talk today about following the smart money and how to find high probability trades. Before we get started, you should read Characteristics and Risks of Standardized Options. Get a copy of that by emailing investorservices@theocc.com. All right, I'm just going to jump right in here. Think of your usual trade size. Maybe it's a 5 lot, maybe it's a 50 lot, maybe just 1 or 2 lot. But if you knew a trade was going to be a winner, would you trade just your normal size, or would you trade it bigger, like really big, right? What do you say? Well, obviously, if you had a crystal ball and you just knew, you would trade it huge. The more confidence you have, the bigger you can and will trade, and that's how you make more money. So look here. Earlier this year, January 31st, 2,250 put credit spreads traded in Cisco Systems. 2 days later, at expiration, the person who made that trade could have locked in $157,500 winner. Now, that's a nice 2-day profit. It's a big trade. That's a lot of confidence in this trade. Now, who is making these sorts of trades? Well, it's the Wall Street traders, the professionals, the guys who people are always saying are taking their money. These are the people we love to hate. The professional traders that trade for the big institutions like Goldman Sachs, who made $47.3 billion last year. How is that remotely possible? $47 billion? These institutional traders, they're the same people who made billions leading up to the 2008 financial crisis that left a lot of people out of work and at risk of losing their homes. And a lot of people did lose their homes. Look, when you're in Chicago or New York, and you see that, 27-year-old dude pull up to the valet at the steakhouse in the shiny new Ferrari, well, guess what that guy does for a living? And then there's the high frequency traders whose firms pay $10 million to build microwave towers so their order gets to the exchange before yours by 3 milliseconds. And then you're left out in the cold, right? How do we compete? But the one thing that's undeniable is that they're smart. I mean, you don't get to that level without having figured some stuff out. We still don't have to like them or trust them. We can still disparage them every chance we get, but they make money because they know exactly how to do it. The bad guys. Now, are these institutional traders our friends? Yes, actually they are. And why? Because from today forward, these traders are going to help us with our trading every day on a daily basis. Imagine that for a minute. There is a way to have institutional traders share the trades they're making with us real time. They do all the work, we see their trades, and we trade those trades right along with them. This is my promise to you. I'm going to share with you a way to trade high probability trades so that you can boost your win rate by up to 53% more than your current win rate by actually seeing the trades professional traders are trading live, real time, and without them even knowing. Wow, that sounds pretty great, doesn't it? Now, at the end of this presentation, I'll share how you can take the next step and start getting these results right now. What do you say? Is that a fair deal? Hit that questions box and let me know. Are you liking what you're hearing? Is that a pretty fair deal so far? Give me a big old yes, please, in the questions box on the GoTo webinar control panel. Sherry says yes. Robert says yes. Joel says yes. Shannon says yes. All right, good. Now, one more thing. Be sure to stay until the end of the presentation. The most important things that I will share come later. And to help keep the focus, I'm going to hold all questions. If you have a question, write it down. I will get to it later. So that said, hey, let's keep it positive and let's have some fun. Sounds great? So once again, I'm Dan Passarelli. I traded for years down on the floor of the Chicago Board Options Exchange, wrote 2 of the most popular books on option trading. I worked with every major options broker and options exchange in the US and abroad, and get to be on TV a lot, which is kind of fun. But this is also who I am and what I do. And honestly, these are the important things. The most important thing to me is my family, my wife, Kathleen, my kids, Sam and Isabel. My wife, Kathleen, many of you probably know her. She's been part of the Market Taker team for a few years now. She used to be a copy editor, or what you might call a proofreader, for some well-known publications. She now proofreads our articles. She catches our mistakes. She's the person who makes us authors look smart, because anybody can make a mistake. Now, in addition to Kathleen, I mentioned our two kids, Sam and Isabel. One of the things we like to do together is travel. We enjoy new cities, learn about new cultures, nature, food, and wine. We've been all over the world together. We're also a musical family. We enjoy listening to it and playing it as well. And these are the things that are important to me, and trading helps me be able to do them. But enough about me. Let's talk about the important person here. Let's talk about you. I know some of you are just starting out. Some are already doing pretty well, and some of you have been struggling for a while. Now, whatever your success level is now, you believe you can always do better, right? And maybe that means having a little more freedom to take some time off and play golf, or actually taking that, 5 to 7 day vacation to a dream beach home at an Airbnb with friends or family. Maybe being able to give more to your family members, put your kids or grandkids through college. Now, look, here at Market Taker, I'm never going to preach about how trading can get you that brand new Ferrari, because it's not who we are, what we do. But what if you could learn a life skill, trading, that allowed you to go and purchase that, fun Mustang convertible to joyride on a nice summer day? Like, these things are possible. What I'm going to share with you today is designed to help in that, but to help with consistency and reliability. This is not a get-rich-quick scheme. I mean, we're not trying to do it slow either, don't get me wrong. Maybe we can call this a consistent wealth-building activity. How about that? It's about drastically increasing your win rates with high probability trades to produce consistent profits over and over again. So you have that one part of your overall trading strategy that you can rely on no matter what. Now, let's talk about this. Time is money. You've heard somebody say that before, right? In option trading, time literally is money, or at least it becomes money. The reason is because options provide more ways of making money than just direction. One of the most important of which is something called time decay. As time passes, options lose their value. And this helps certain traders who know how to put time decay to use. Time passing can create money. And that last bullet point, it might seem counterintuitive that time passing creates money, because a lot of traders buy options, but hey, I like to say, if you can't beat them, join them. Put time on your side. Instead of buying options, being at a disadvantage, many traders sell them. In fact, selling options is actually more popular than buying them, because it's a way to make money by time passing. Now, one thing about selling options is that if I just sell an option, I could end up with a small profit potential, but much bigger risk. So we want to be strategic. There are two limited risk, very strategic option spreads that are at the heart of all option trading. In fact, I call them the mother strategies of option trading. Those are credit spreads and time spreads. If you can master these two strategies, you will have all of option trading mastered. And the reason is because nearly every option strategy is made up of one or both of those. It is important to get credit spreads and time spreads. So right now, I want to share the inner workings of credit spreads and walk you along the path to putting them to use. There's two types of credit spreads: call credit spreads and put credit spreads. A call credit spread is when a trader sells a call, usually at or out of the money, and buys a higher strike call with the same expiration on the same underlying. A put credit spread is when a trader sells a put, usually at or out of the money, and buys a lower strike put with the same expiration on the same underlying. Now, an important takeaway is that because they're both call and put credit spreads, this method of trading works well in both up and down markets. Now, to be clear, these are not directional trades, not bullish or bearish trades. These are what many traders call a line in the sand trade. They're forgiving. As long as the stock stays on this side of the line, it wins. So let's go through an example so you can see what I mean. Let's say a trader studying Citigroup stock and thinks it's not likely to rise above a certain point. Maybe there's resistance at $54 a share. The trader can position him or herself to make money as long as Citigroup doesn't go above $54 a share over the next 10 days by selling the 54 calls that have 10 days to expiration and at the same time, as part of the same trade, buying the 55 calls in the same expiration. So they sell the 54 calls at 49 cents, buy the 55 calls at 28 cents. So this trader has collected a total of 21 cent credit. Now, 21 cents of option premium is $21 of money. This is a 10 contract trade, so that's actually collecting $210. And look, as long as the stock stays below 54 bucks a share for the next 10 days, this trader can make up to $210 on this 10 lot and do so with limited risk because we're protected from buying the 55 strike call. Now think of it this way. The short option is where one makes or loses money. If the stock is below it through expiration, you get the max profit. If it goes above it, you can start losing. And the long option, that's the protection. It's the one that limits losses. Now, this is a probability curve. The horizontal axis is the stock price, and the vertical axis is the probability of the stock being at that price. Now, what I have here is a bell curve. Most professors will say that stock prices are log normally distributed. So this graphic is not necessarily technically correct as a bell curve, but hey, it's close enough. Now, to make it simple, here's what this shows. The middle is where the stock currently is. So the higher part of the curve here says smaller moves are more probable than bigger moves, right? If we look at the past 30 days or whatever, the past 30 days of closing prices, or hey, even if we're forecasting for the future, if here is today's stock price, most recent or future prices are going to fall, whoops, I'm off a click here. Most recent or future prices are going to fall in the middle, like right here. But some would have a bigger move, right, further away from the stock price. So instead of being here, like a small probability of the time, we're going to get those bigger moves that are in what we call the tails. Now, another huge implication that this has is that finance professors assume that the stock has just about a 50-50 chance of heading higher or lower. There's a slight interest rate component there, giving a small bias to the stock going up, but this is basically how finance professors think about it. It's about 50-50 going up or down. So that said, we're going to talk about how we can change those odds more in your favor later in this presentation. In this case, in our example, the stock was at $52.61 and that's when the trade was put on, and we sold the 54 strike calls. So that means we kind of have a head start in making money. So let's go back to that professor math. If the stock is at 52.61 and there's about a 50% chance of it being lower at expiration, well, this 50% of the time would all be winners. Then for the other 50% of the time, when it goes up, well, some of that time, the trade would be a winner too. It's only if the stock is trading far enough above the strike price at expiration does the trade lose. So that's why credit spreads are just naturally high probability trades, and that has huge implications. First, the objective is not to do this once, to make one trade. It's to make these trades that have a much better chance of winning over and over again every day. More wins compounded over time can grow your account exponentially, which is great if you have a small account and want to grow it into a bigger account. But you know what? It's also great if you have a big account and you want to grow that into a bigger account. Now, with our trades, we have to look at more than just the win rate. We need to talk about risk. Every trade is a balance of probability of success versus risk reward. Let's look at that Citigroup trade again. If a trader sold this credit spread and collected $210 and held it all the way until expiration, and Citigroup ended up below $54 a share at expiration, the options would expire And the $210, if we're in this range, that would be our final profit, as shown here by this blue line right here. Now, if the stock rises above 54, the trade might still be a winner. The credit from selling the spread was 21 cents. So the actual break even is $54.21. Below 54.21, the trade wins, and above there is where the trade loses. And we're going to talk more about losses in a second. Now, first, as you can see here, the stock is currently at 52.61. So there's about a 50% chance of the stock going down. And if it does and is trading lower at expiration, that leads to the maximum profit right here, right? Then there's a 50% chance of it going up. And some of that 50% would also be a winner, right? It would lead to our max profit. Up until we get to $54 a share here, that's where the trade starts getting worse. So look, man, your odds of success are overwhelmingly in your favor. And, that's using that professor 50-50. That's not even taking into account your skill at technical analysis or anything. But I want to be very clear about something. With credit spreads, you do stand to lose more than you stand to win. While the maximum win is 21 cents of option premium or $210 of money on this 10 lot, the maximum loss is 79 cents. We calculate the max loss by taking the difference between the two strikes. So 55 minus 54 minus the credit. So that's $1 minus 21 cents is 79 cents. Now, in this case, the risk is more than 3 times the profit. So like I said, there's this balance between probability of success, which is very strong with credit spreads, and the risk reward. So we need an edge above and beyond just the probability of winning. And this is what is different about my approach to trading credit spreads. We get that edge, so the odds are overwhelmingly in your favor, above and beyond the simple approach that everyone else uses trading credit spreads. What if we could find a bunch of credit spreads that are naturally high probability trades to start out with, and then we take all of them and see which meet certain filter criteria that would make it an even higher probability of winning above and beyond just what everybody else does. And then we take only the trades with the best probability versus risk reward of those. Now that would be powerful, wouldn't it? All right, now remember those professional traders? Let's talk about this guy again. I used to be this guy, or at least a guy like him. That was before I chose to work with you to beat guys like him. In fact, I know this sort of guy so well, I actually have a picture of him from when he was a kid. Do you want to see it? Do you want to see it? Wait for it. Yep, that's probably him, right? They take your lunch money, eat your lunch, make you do their homework, and now they dominate the financial markets. Are they mean? Yeah, they're mean. Some of these guys will just take and take and take. Do they cheat? I don't know. Maybe they do. But you know what? Like I said before, they are smart. You cannot be a professional trader, not for very long anyway, without having figured some stuff out. Say what you will about them, and you're probably right, but they know how to make money. So I have a question for you. What if you knew what the professional traders were doing? They'd find the good trades, they'd do all the research, they would trade them, and you'd know exactly what they were doing the moment they do it without them even knowing it. It's kind of like having the bully do your homework for you. Now, wouldn't that be great? But one thing we know is that sometimes even the smartest people make mistakes. So after the bully does our homework, we're going to proofread it to make sure it's right. This whole system is predicated on them being right. But you know what? They're not always right. But do you know what is always right? Methodology. Our methodology proofreads what they're doing, so we not only have trades from super smart people, but we're only taking the best of them. That's what I call the genius method. After seeing what professional traders are trading, we verify the technical setups using support and resistance, that we can sell options only that are overpriced, and that there are no planned announcements that can cause the stock to lose. And this is how we gain an unfair advantage. We see what professional traders are doing right there on our computer, so we're getting all of their unfair advantages, plus we screen them with our time-tested methodology to take only the best of the best. This does what no computer or human can do alone. It combines algorithm technology with hands-on screening. Now, before I get into how to see the trades the institutions are making, first, let's take a look at what this looks like in real life. So here is a simple example. On February 8th at 9:35 and 57 seconds, in Alphabet, an institutional trader sold 351 of the February 9th 144-145 put credit spreads at 27 cents. So that means the trader sold short 351 of the February 9th 145 strike puts. At the same time, as part of one trade, also bought 351 of the February 9th 144 strike puts. Now that is a put credit spread. Same expiration, two different strikes. Because the 145 puts are a higher strike, they had more premium. Thus, the trader took in a credit. Now, when the trade was made, in this case, it was 24 cents per contract, which is $24 of actual money times 351 contracts. Now, if this trader held this trade until expiration, which happened to be the next day in this case, he or she could have made $8,775 at that time. Now, what if you were alerted about this trade the millisecond it happened? Well, a smart trader following along and trading, just 5 contracts could have added a quick $120 to his or her account. Now, $120 might not look like a lot compared to $8,775, but imagine doing this many, many times over and over again. This is what leads to this being a wealth building activity, even and especially for smaller traders. And bigger traders might consider trading somewhat bigger trades. A 10-lot trader could have brought in $240, 20-lot trader could have made $480. And that was just holding it for one day. Here in Carvana on January 5th at 12:14 and 24 seconds, 300 of the February 35-45 put credit spreads traded at $3.12. So this trader sold 300 of the 45 puts, at the same time bought 300 of the 35 puts. The trader took in a total credit of $3.12 per contract. So that's put credit spread. And its advantage is that it's a not very bearish trade. It's not like a bullish trade, it's a not very bearish trade. As long as the stock stays above $45 and is there at expiration, this trader in this example that traded this 300 lot could make a $93,600 profit. So imagine you see this trade the millisecond it happens. A trader trading just a 5 lot on this could add $1,560 in profit. 10-lot traders could have brought in $3,120 following along, and that would be $6,240 for 20-lot traders. All right, now we get these trades every day. In Netflix, on another example, on February 28th at 1:03 and 36 seconds, a big trader traded 600 of the February 9th 550-555 put credit spreads at $1.36. So that's a pretty big trade, right? Again, these are not super time sensitive trades like day trading or anything. The price doesn't actually change all that much typically over short periods of time, because remember, you make money by time passing. So even if you don't see this trade right away, you notice it like an hour later, it's still possible to follow along. Now, if this trader held this trade until expiration and the stock stayed above $555, At expiration, he or she would have made 81,600 bucks. And that's a pretty great day trading, huh? And that was just one day, holding it overnight. Even a small trader following along, trading just a 5-lot, could have added $680 to his or her account. 10-lot traders could have made $1,360. And on a 20-lot, that's $2,720. So these are just a few examples so that you get a feel for how this works. And I have dozens of examples of how all this works that I'll be sharing in even greater detail in a bootcamp video class. Now, in just a few minutes, I will share how you can get access to the video recording of the bootcamp that we have already recorded for you. Now, any professional athlete or anyone who's ever been great at anything for that matter has to get up like 2 hours before everybody else to get in that extra practice. Traders have to do that too. But I don't want to get up at 4 a.m. to get all the trade data that I need from the CEOs and do all the research and model out the trades and such. I like to sleep. The one thing that I know is that big institutional traders, like they're already doing that work. So why double up efforts? If you're like me, you get a lot of messages and some of them are important. And, you know, like if you didn't open the email or text about this training that Dave's putting on, like you could have missed one of the best trading opportunities that I've ever shared. But, you know, you get some noise too. What if you could just get the most important messages, skim them over in your lunch hour break, get all the information you need all in one place without the noise. You just see what's important, what I like to call purposeful notifications. Wouldn't that be great? Well, that is what I'm sharing right now. Credit Spread Genius is here. Every day, you'll get real-time alerts when traders are trading a large volume of credit spreads to open a new position. You'll be the first to spot these trades so you can participate in the best trades in the market using my proprietary trade triggers to see exactly when the trade is happening real time. Then follow a simple checklist to proofread it, and it is all extremely simple. I'm sharing this now so you can start getting the results you deserve. Like this one, on January 16th in NVIDIA, a trader could have followed the institutional traders, traded a 5-lot of the January 547.5, 560 put credit spread, and could have made $1,625 holding it until expiration. A 10-lot would have been $3,250 profit. In Wayfair, on January 11th, a trader could have traded a 5-lot of the 50-55 put credit spreads and made $775 on a 5-lot, or $1,550 on a 10-lot. And the best part is, Credit Spread Genius reveals trades that you would never find without it. Like in CYTK. When's the last time you even looked at CYTK stock? But that popped up on our screen. And on January 11th, the trader could have done the January 115, 125 call credit spreads and made up to $650 on just a 5-lot, or $1,300 on a 10-lot. Meet Chris from Mobile, Alabama. Chris was one of the first people to use Credit Spread Genius. Chris says, as a busy professional, I like the credit spread alerts because they save me time researching the trades. The nature of credit spreads also means that these alerts are not as time sensitive. I can check the alerts in between patients or at lunch and then quickly formulate a plan to execute the trade. So let's talk first about who Credit Spread Genius is not for. Just to be clear, this is not people looking for a get-rich-quick scheme. It's just not that kind of strategy. This is about having a system that drives consistent overall results. And this is also not for people who just love spending hours and hours going through thousands and thousands of charts to hopefully, fingers crossed, find a halfway decent trade. This is designed to save you time. Your time is valuable. These trades can be made within a couple of minutes, not hours, because all the information just pops up on a browser window. And it's also not for wishy-washy procrastinators, overthinkers, but I know that that's not you because you're here today. You invested your time in learning about this. You want to move forward. So who is this for? Well, this is for you. If you want a true edge over the market, this is for you. if you want your trading to be easier and less time consuming. This is for you if you have a busy schedule and can't look at the market all day. And this is for you if you can follow a few simple steps. And you know what? This is for you if you are willing to invest in yourself. I want to invite you to join us and start using the Credit Spread Genius system right away. So first, you're going to get the Credit Spread Genius scanner so that every day you'll get real-time alerts when the big institutional traders are trading high probability credit spreads. This simple scanner searches the universe of over 5,000 stocks and makes it possible to find the trades that you would never have access to without it. Now, this is my easy to use alert system that instantly alerts you to institutional credit spread trades. You'll be following the smart money, so you never have to second guess yourself again in the market. You get password access to real-time trade triggers sent directly from the Chicago Board Options Exchange. I've negotiated a contract with the SIBO for you to get professional trade data that you can't get from any other source. I, as a professional in this field, pay for the data, which is not only expensive, it's about $7,000 a month for us professionals, but it's not available to non-professionals at any price until now. And the best part is, it's all legal. When you sign up, you will sign up as yourself, a non-professional trader, and get access to these signals through this deal that I made with the exchange on your behalf. This is both powerful and simple. Now, the closest thing to what I'm sharing with you today is what you'd call an alert system. This is what one person who used Credit Spread Genius had to say about his experience. I've used other alert systems before, mostly those alerting naked long calls or puts, mostly way out of the money, and they seem like a lottery ticket. I never gained any ground with those. This credit spread alert seems different somehow, like it tells more of what the big dogs are thinking. So yes, what I've created is different. Even the few credit spread scanners that are out there, they boast high probability, but they're only doing that simple professor math. They don't have a true high probability once you weigh it against the risk reward. They don't have a true edge. Now, let me ask you, when the plumber comes by for 30 minutes to fix a busted pipe, you're not paying him for his 30 minutes, are you? You're paying him for his 30 years experience. So I decided to save you years and years and put everything you need to know from my 30 years experience into a few simple, short, quick, easy videos to get you up and running so you can start using Credit Spread Genius right away. So what this means is that first you're going to get access to the Credit Spread Genius trade triggers every day. Whenever a professional trader makes a credit spread trade in big size, it's instantly, within milliseconds, going to pop up on your browser window. And I'm going to give you the accelerator videos so that you can just watch a couple quick videos and get up and running fast. Now, the bottom line is we know this can work for you because we're going to make sure you have all the training you need to make it work. So today, you will also get access to the archive of the Credit Spread Genius Boot Camp video so that you can completely master the system. This is already recorded for your convenience, and it covers everything you need to completely master trading credit spreads with Credit Spread Genius. This is a $3,750 value. So first you're going to get the trade triggers popping up on your browser window. You're going to get up and running right away after watching a couple of quick videos, but then you're going to drill down, watch the boot camp, and totally have this mastered. That's a $7,750 value. Now, this is what I call the MTM spreadsheet trade tracker. It's my personal spreadsheet that I created for myself for monitoring all of my trades, but I've put it now into a template that you can use too. And its formulas are designed to easily calculate all the trade criteria that you need to analyze, trade, and manage your credit spreads, as well as other types of trades too. I made it so simple, it's like cheating. That's a $500 value. So what that means is you're going to get the trade triggers, you're going to get the accelerator videos, you're going to completely have this mastered with the boot camp, and you're going to track all your trades so that you can have a record of them, manage them properly, have a plan, and slowly improve as you log all your trades and make tweaks to your style. Now, this is a bonus designed to keep you further learning and informed and to keep you accountable. We call it Office Hours with Dan. The third Wednesday of every month, you'll join me online to check in and hear about the latest happenings in the market, what we're working on, and to get your questions answered on specific trades that you have on or considering putting on, or even questions about the Greeks or whatever. So every Wednesday, you're going to join us in every third Wednesday of the month, you're going to join us in office hours also. So you can get the trade triggers, the accelerator videos, the boot camp. You're going to track your trades with the spreadsheet, and you're going to meet once a month in our sort of mastermind group and get all your questions answered. Credit Spread Genius works on all platforms. Open a simple browser window to deliver your trade triggers real time. There's no special software. Trade on your platform of choice. But you know what the best part is? It's what I call the working leverage. Here's what I mean by that. Typically, more leverage means more risk. In this case, less work means more return. You're leveraging your time. Because look, I put this together. It took me years to put this together. I've done 50% of the work for you. And the professional traders, you're just going to see their trades pop up. They do 48% of the work. You just do 2% of the work and you get to keep 100% of the profits you earn. Buy now. You can see why the Credit Spread Genius trading system is a steal even at $8,050. If all this did for you was identify high probability trades to take your trading from where it is now to boosting your win rate so you can be consistent and not have the huge swings that all too many traders experience, I mean, wouldn't it be worth it just for that? But you know what? Today, this is not $8,850. Because you made the investment of being here on this training and for being one of my action takers, you are the elite. You deserve to be rewarded. You're better than millions of other traders out there, and I want you to have the results that you deserve. Get started today for a small, easy investment of only $597, but you have to take action right now by going to markettaker.com/CSG123GO. That's market as in stock market, taker as in take what is rightfully yours, 2 T's in a row, markettaker.com/CSG, short for Credit Spread Genius. Now, a lot of times I say, hey, this is limited to the first 20 people or something like that. In fact, my marketing guy told me I should say that, but I don't think that's necessary. You're smart. I'm not going to do that. I want as many people to have this as possible. Now, why would I give such a huge discount like this for as many people that want it? Well, you know what? Admittedly, it's for a selfish reason. Every year, we vow to create 1,000 trader success stories. And the way I find the traders who are most likely to become a success story is I show them a great trade and they trade it. I show them great value and they invest in it. And that's what I'm doing here. I'm screening out the wishy-washy, the uncertain, the scared, the nervous, the people who have to ask their mom if they want to go make a trade. And I'm giving you an incredible value, $597 per quarter. Now, I say per quarter, let's talk about that for a second. Usually, like you, I invest in myself with online classes as well. I estimate that I've spent over $100,000 investing in myself in classes over the past about 6 years or so. And when I see a training like this, and at the end, there's an incredible discount, I say, okay, well, it's a trial price for the first quarter. I mean, sure. I mean, $597. I get these trades every day for 3 full months. Yeah, okay. I think I can make money on this investment. But then, I look at it and I think, well, after the first quarter, what happens, right? Because most of the time it goes up to full price. And, I guess that's kind of fair, right? I mean, if you trade this and, maybe you make $1,000 the first month and then you get better 2,000 the next month, 3,000 the next month, you know, you really get going with this. I mean, hey, it's worth 3,000 bucks a month, isn't it? But I don't really believe in that. Not for me and not for you. So after the first month, when you renew, you will you're locked into this $597 a quarter. Now, when I say locked in, there's no long-term contracts. You know, you can quit anytime, but you get to keep this discount renewal for life. Now, I was not kidding. These trades do come directly from the Chicago Board Options Exchange. In fact, as soon as you go to markettaker.com/CSG, you're first taken to the CBOE subscriber agreement from the exchange. And again, that's because of the deal I worked out with the exchange so that I pay for the data. And because you're a non-professional, only through me can you get this data. So they require everyone to complete this form first. This should be what you're seeing right now on your screen. If you are not, please go to markettaker.com/CSG and see. And also use the same email that you used on the sign-up sheet when you get to the subscriber agreement. Now, reminder, when you go to markettaker.com/CSG, first you're going to get the Credit Spread Genius trade triggers showing up right there on your screen. You're going to get up and running fast when you watch a couple of these short accelerator videos. Then you're going to truly master it once you dig into the boot camp video. You're going to track your trades so that you can manage them properly with the spreadsheet. And you're going to meet me once a month, every third Wednesday for office hours with Dan. Now, go to markettaker.com/CSG, or if you have some questions, I might have time for one or maybe two, but you can also call 773-302-1645. Now, there's an extra bonus on there. We're also going to put you into the greatest community chat room ever created for option traders, the MTM community chat room, so you can ask questions to me or your fellow traders. Also, some people say, hey, Dan, I don't have 597 bucks. Is there a way to finance it? And that answer is yes. Go to markettaker.com/CSG, you click the PayPal button and click on PayPal credit. One more bonus, extra bonus. We're going to give you a 30-minute strategy session. This is going to be a 30-minute phone call with our trader success team. We're going to talk about your trading, things that are holding you back, and help you overcome them. And together you'll create a plan to get to the next level. That is a $500 value if you get that on our website, but we're going to throw that in and give that to you for free today. Also, if for any reason trading credit spreads is not your thing, we have a risk-free scanner swap guarantee. We also have Time Spread Genius, Wing Spread Genius. We even have one for 0-day options, even one for short squeezes. We will swap you into a different scanner if this doesn't fit your trading style. Now, I might have time for one question. Does anybody have any questions about Credit Spread Genius that I can answer to help you make the decision to come and join us? Anybody? All right, then if you think of one, give our people a call at 1-773-302-1645. And that said, I'll see those of you who I see a few good handful of people just joined us. I will see you online. And that being said, I'm going to turn the mic back over to our host.